What's going on, guys? So I want to talk about DraftKings. What a nasty sell-off. Okay, so Penn National Gaming reported earnings today. They actually reported really good earnings and had an earnings beat. However, they got sold off just due to, whatever the reason. Let me see if I can pull up some of the headlines that they said about Penn as to why they sold off. Let's pull up here. Nothing. What's up with Penn National Gaming? Penn shares are trading lower as gambling stocks fell for the session amid weakness in Penn National Gaming. Penn shares dipped despite better than expected earnings. DraftKings reports first thing on Friday. DraftKings Digital Sports Entertainment and its gaming company. Okay, we already know that. DraftKings was trading 10.5% lower to 50.35. Wow. So the stock has a 52-week high of 74.38 and a 52-week low, obviously, since coming to the market of 23.04. Penn National Gaming is the operator. Okay, we already know that. Penn was down 11.5%. I want to see why they sold off Penn. Why did they sell off Penn? Thursday morning, the keys for investor could be the discussion on growing momentum and land-based casinos and the continued rollout for Barstool Sports. What happened to Penn National Gaming? Revenue was down 6% year over year. Revenue of 1.27 billion in the first quarter beat street estimates. See, I still don't figure out. The company reported earnings per share 55 cents, coming in ahead of the street estimates of 29 cents. I'm still not getting a clear indication as to why Penn sold off. Penn National Gaming highlighted strong demand at land-based casinos at cost structure improvements. The company posted net income growth of 7%. Again, I still don't understand why they sold off. The company's online sports betting and online casino segment saw launches in Michigan and Illinois in the quarter, and I again still don't know why they sold off. Okay, so I don't understand why Penn sold off so aggressively, especially after earnings beat. Makes no sense at all. Could it just be because the overall market was weak a little bit this morning before actually rallying into the close? Possibly. Could it be because, I know Canada's online gambling is on hold. I know maybe they're worried about new markets that they're going to be able to attack for this coming year. Whatever the reason, I have no idea why Penn National Gaming sold off. So here we are with DraftKings, and DraftKings went ahead and sold off. They actually finished down at 51.89, down 4.5 points, down 7.64% on the day, just based off of Penn getting sold off after they reported earnings. So as you can see here on the chart, we did come down perfectly to the 200-day moving average. We did dip below the 200-day moving average, however, quickly reclaimed that. So what I'm looking for tomorrow with DraftKings when they report earnings, what I am looking for is a confirmation of today's high price, which is also going to reclaim the 5-day moving average. And that price is going to be about $55.94. Let's call it, for the sake of the video, $56. If they have good earnings and everything is a beat and the outlook looks good for the rest of the year, I possibly see DraftKings trading at 57 or possibly 58, 59. If DraftKings can get to 59.60, I think that they can reclaim the $60 area. However, the earnings beat would have to be really strong. Forecast would have to be really strong. However, but I believe that as soon as DraftKings can get in over $60, we can begin to test the 62 and reclaim the 62 to start pushing our way back up to retest these all-time highs here. If you are a long-term investor, today was a really good time to go ahead and pick up some shares down here at the 20-day moving average. According to the RSI, we are currently at 32, which normally close to 30 means that we are oversold. So again, if you're looking to pick up some shares on the cheap, you're looking to pick up some long-term swing contracts in options, now would possibly be the best time. Now let's look at this from the other foot. Let's say that DraftKings earnings and forecast is not good. They don't beat, they miss all the way around. What possibly could happen if we get a sell-off? because that's what's been happening as of late, right? Companies report good earnings and then we get a sell off. If we get a sell off, look to retest the lows, which is losing the 200-day moving average. If we lose that $50.23, we really don't have a lot of support down below. This could fall extremely fast down to about $44. As you can see here, these two channels here touched once, touched twice here. This is going to act as a little bit of support here. So if DraftKings reports subpar earnings or great earnings and the market decides to sell them off and they lose the 200-day moving average, we can possibly be looking at a downside at $44. If it does get down to $44, I will be scooping up some more shares and or contracts to swing long term, because I do feel that that is a great price. I felt that the price here, which I did get in long at the 200-day moving average, was a great price. So I am currently long here at around the $51 area, $50 and some change, that area. I'm really looking to reclaim this 50-day moving average, which is going to be 62.17. I really think that if DraftKings can get over 62.17, that's when we're going to finally start that next leg up into retesting all-time highs of $74. So that's what I will be looking at tomorrow pre-market for DraftKings earnings. I really don't hope that they sell off a good beat. I really hope that we can confirm today's price action and possibly reclaim the 10-day moving average at least $57. That would be really good step in the right direction heading into next week for DraftKings. So just keep an eye on that tomorrow, guys. I will keep you guys all updated on the earnings as they come out.